Welcome back to Niaga AWANI, and right now we're going to continue with StashAway, the Malaysia's largest digital investment platform, announced the addition of Bitcoin BTC and Ethereum ETH ETFs to its platform, enabling Malaysians to invest in the two largest cryptocurrencies through a regulated and trusted platform. And this launch comes at a pivotal moment in the crypto market, marked by growing institutional adoption as the price of BTC crosses the USD $100,000 milestone. So to discuss further on this, we have Wong Wai Ken, the country manager of StashAway Malaysia. Thank you so much, Wai Ken, for joining me this morning in the studio. Perhaps congratulations for introducing these two BTC and also ETH, Bitcoin and also Ethereum, into StashAway. We've seen increasing mainstream acceptance of cryptocurrencies right now, and yet volatility remains at it as key concern for many investors. So if you can share, StashAway Malaysia has just launched these two. So what was the factors and what was the decision? What made you do this decision for introducing these two, BTC and also ETH? And also explain perhaps for the viewers out there.
Yes, of course. Good morning, and thank you for having me on. So I think the short answer to why we now have included it on our platform is clients want it, right? We are a fund manager. Clients want access to new and exciting asset classes, but our role is to be, the so-called the grown-up in the room. Just because something is exciting doesn't mean we should offer it. So I think two main reasons why we offered it now. The first development came a year ago when ETFs of Bitcoin and Ethereum first launched, and the acceptance on that in the US has been great. And we have seen institutional interest in this asset class. More pension funds and large funds are also including it or thinking about it. So us as a fund manager, we looked at the numbers and we think that now it is a legitimate asset class, and that's why we're offering it. The second main reason is now in terms of regulatory developments and President Trump, there's much more positive developments in terms of support for this space. So those two reasons are mainly what made us decide to offer it at this point.
But there was one concern. I mean, we know that the Bitcoin has crossed the 100,000 US dollars, but some investors might worry that they're buying at the wrong time or the peak timing. So how do you address these concerns about market timing? Perhaps there are the solid reasons behind it?
So I think the thing about emerging asset classes or new asset classes is that it has to find its footing. At first, when it first launched, maybe it was a bit, people were uncertain what it is. Is it a payment method? And then along the way, it found itself as an investment, as an investment opportunity. And now with growing acceptance, I think at 100,000, what you are getting is significant risk already removed from this. When I say risk, I mean regulatory risk. In Malaysia, it's a regulated asset class. In the US, ETFs have launched. And now with President Trump, he is positioning his people like the Treasury Secretary and the SEC Chair, who are all pro-crypto, to look at this and outline frameworks to be crypto-friendly. So I think buying in at 100,000, while it is the new, close to the all-time high, it's not the same as coming in at 60,000 where there's so much uncertainty. The previous US administration was actually quite anti-crypto. So there's much more regulatory risk there.
Okay.
But of course, it's still a volatile asset class, so people should be quite careful when they invest.
So right now with Donald Trump as the president, it'll be more, I would say, easier.
Yes, there's much more regulatory certainty. So let me just explain a little bit more. So the SEC, their version of the Securities Commission, the Securities and Exchange Commission, has now a crypto task force, right, to look into establishing a framework for digital assets. And what does that mean? It means more clarity in terms of what constitutes security, the taxation laws. He appointed also a crypto czar to kind of forward digital assets agenda. He talked about a digital asset stockpile, which means that the US will now look at owning digital assets. They also, he also signed an executive order in terms of a sovereign wealth fund, and this sovereign wealth fund could have the potential to also hold digital assets. So there's so many developments, regulatory developments from the largest market in the world, which will set the tone for different developed markets. So buying it at 100,000, while it is daunting because it's near the all-time high, because it's an emerging asset class, there's so much more room to go in order for you to see some upside from this investment. It's not like gold, or it's not like equities or bonds which have been with us for decades, if not centuries, right? So it's something very new, and it's developing in front of our eyes.
But for some retail investors, feels like this crypto as uncharted territory. Yep. Exciting, but also intimidating at the same time. So we can say that they're very completely new to crypto, basically. For those who are completely new, what should they understand before adding Bitcoin, also Ethereum in their ETFs, Ethereum ETFs to their portfolios through StashAway? Can you tell them?
I will say for newcomers, it is very volatile. As an asset class, it moves up and down more than any other asset class that you can get access to. So be very, very careful when considering allocation to crypto. You know, I think why we are so captured by cryptocurrencies is because we hear a lot about it. When it goes up a lot, the potential reward is massive. But at the same time, when it crashes, everyone says, "Oh, it's over. You know, there's no recovering from this." But the point is that it's gone through a few cycles, and like I say, now there's more regulatory support. It's still a very volatile asset class, so your allocation to it should be very measured. As StashAway, as a fund manager, we only advocate up to 5% of your investment holdings into cryptocurrency because it is volatile. You don't want your investment portfolio to swing wildly up and down, right? You want it to be steady, especially if you have long-term goals like retirement, all those things. So volatile, include just a measured amount.
So 5% allocation. So, but can you break down how this works in the practice, and especially for everyday investors? For example, who may still be skeptical about crypto's long-term value, like you mentioned, it's volatile. So how's the breakdown like?
Yeah, it's risky, but also the reward is there. So investing is all about risk and return, not just return, and also not just risk. It comes hand in hand. And then it also comes with risk management. If something is very volatile, you should look at only including a measured amount, a small amount. So typically when fund managers look at asset allocation, when we look at building a portfolio, they talk about the 60-40 portfolio, 60% equities, 40% equities. And if you look at the return of that portfolio, that so-called model, it has returned around 6.8% over the last 10 years. But if you include just 5%, which is a relatively small amount, into this 60-40 portfolio of cryptocurrencies, that return improves to 9.3%. So from 6.8 to 9.3, even though the difference is only 2.5%, if you compound this across 3 years, 5 years, 10 years, it's a lot. So now I will talk about risks on the other hand. Okay, so why we say only 5%? So crypto is known to rise a lot in a very short period of time, and then shortly after it crashes, right? It crashes. In 2021, Bitcoin fell around 70%. Before that, in other cycles, it's fallen 90%. We see volatility coming down in that it won't move up and down so much, but it is exactly because of those crashes in those short period of time, which is why conservative investors should not look at investing in this. And if you are maybe a little bit more balanced, or if you're a younger investor who is more risk, can take more risk, you should look at investing just a little bit, because it improves the risk return of your portfolio over the long term. Bitcoin has done 60% per annum compounded over the last 9 years. So even though it rises and falls over different cycles, if you hold on for long enough, you can be part of that 60%. Whereas if you look at the S&P 500, the US market, over the last 10 years, that's done somewhere around 12%. So it's worth taking the risk because the returns are so much higher. Having said that, I just want to say again, maybe just a measured amount.
Like you mentioned earlier, like for the newcomers of investors, instead of, like you mentioned earlier, those are the steps that they should be looking for or looking into when they start investing into Bitcoins, also cryptocurrencies. But does StashAway itself helps to guide them into investing into this?
Yes, absolutely. That's why I think you cannot ignore the fact that there are many other mainstream asset classes that you use to grow your wealth. There's equities, there's bonds, there's gold, there's real estate. So Bitcoin is just a small portion of that. We guide investors by telling them about the risks to make sure that they are making the right decision before they invest in these cryptocurrencies. But also it's about continuous education, not just about cryptocurrencies, but everything else. Clients should view investing in cryptocurrencies in the same, I would say, breath as their other investments as well. Okay. Cryptocurrencies is not the only thing out there. It should be used to build wealth alongside their other investments. Yeah.
And we know that every crypto cycle brings new narratives, whether it's about regulation, institutional adoption, also technological advancements. So what makes this cycle different from the previous ones? Yep. And also how is it significant, how is the role significant of institutions in shaping the market of this new trend?
If an asset class is to grow, or if a price of any security is to increase, you have to look at who else is investing in it. If there's no demand, then the price will not go up. So that is why institutional demand is important, because crypto was a retail-first asset class. It was started, on the internet a long time ago, and then mainly retail investors started adopting it. And then now that there is an ETF and there's so much more legitimacy around it, and there's all this regulatory support in the US, institutional investors, like I said, the large funds, the pension funds, are thinking about allocating a small amount, either directly to Bitcoin or Ethereum, or through proxies, really, like stocks that mine Bitcoin, that hold Bitcoin. So increased adoption in terms of more investors coming to the space will lift the price of cryptocurrencies. That's why that trend is really important. And just to come back to my earlier point about why it's different now, is because of all the regulatory support that US is throwing behind it. I would say President Trump is the first crypto president. Before this, administrations were very anti-crypto, against. So I would say that we have crossed into a new phase. And therefore, with this regulatory support and with more institutional investors coming in and investing in a measured way into Bitcoin and other cryptocurrencies, I think it is a new phase in terms of cryptocurrency adoption.
We have about 2 minutes plus left. Sure. Perhaps you could explain more on ETFs or Ethereums, which are said to be a smart way to access crypto versus direct ownership. So perhaps what is strategic or specific advantages do these Ethereums or ETFs offer in terms of security and also risk management at the same time?
Sure. So if you look at ETFs, they are a very simple way to invest in any asset class, right? Whether it's equities, bonds, gold. ETFs have been around for a long time. It is something that is adopted by institutional investors, retail investors to get exposure to what they want. And then you have cryptocurrencies. Cryptocurrencies, 1 year ago, did not have an ETF platform for you to invest in it. You had to open a cryptocurrency account, maybe even try a wallet, maybe even have to learn how to use different interfaces in terms of getting access to it. So all of that can be quite intimidating for a lot of mainstream investors, especially those who are not so tech savvy. So I think ETFs just simplifies everything. And by simplifying it, it means that, it's very easy to get access to. I'll just buy it alongside how I've bought my other investments. So in that sense, ETFs are a great way to access cryptocurrencies. You don't have to learn a lot of new things, new interfaces, and new accounts. So in that sense, ETFs are also a traditional kind of way to invest. Crypto is 24/7, right? Aftermarket, weekends, it's always trading. ETFs are not always trading. So that I would say is a disadvantage in terms of like wanting to buy and sell if you get access to cryptocurrency through ETFs. If you really want to sell at that point in time and the market's closed, you can't sell. If it's the weekend, you can't sell. But I would say it's an advantage if you're talking about impulse control. As investors, sometimes we're emotional. We see big swings in the security, in the stock, in the markets. So having that circuit breaker, lets you breathe, let the price recover. And if you're into cryptocurrencies for the long term, you wouldn't need to trade, after hours on the weekend anyway. So I would say that ETFs while they are traditional, because they only operate during market hours, they help with investors' impulse control.
All right, that was Wong Wai Ken, Country Manager of StashAway Malaysia. Thank you so much for your insights. So there's pros and cons towards ETFs, but just invest smart, or else you can just get help from StashAway Malaysia or Wong Wai Ken himself. And we'll go for a short break. We'll be right back after this with my colleague Nina Rosman.